Hi, I'm Patrick Tuttle, the real estate guy with Coldwell Banker Heritage and Legacy Management Services with your El Paso real estate market update for the month of February 2023, and I'll be right back with the report. All right, so I'm back with the report, and as always, we're going to start off with our resale homes and show you what's going on. So Jess B's put together this lovely little graph right here, which shows you the last 18 months of data. And what you can see is on the green line, that's the properties that are available, the number of properties, and we're seeing that widening gap here between the solds and the available properties here in February 2023. So here's what's going on for real. Pending contracts, they're down 11.6% year over year. We're down to 329 of them in the month of February, and sales continued to drop at 27%. Now, remember, we had our peak in 2021, and 2022 was just behind that. So we're still coming down, and we've got great volume overall. But yes, it is a decrease in sales. Months of inventory is up 85.5% year over year from less than a month a year ago where we had only 0.78 months of inventory. That's about 23, maybe 24 days worth of inventory in the marketplace. And now we're at 1.45 months of inventory, which is roughly 45 to 50 days of inventory. So the inventory is growing. Inventory is still moving very quickly, though, because we've got a lot of demand in the marketplace still. Average price dropped just a little bit, down to $244,129, and the average size of the home dropped just a little bit too. We're at 1,831 square feet in the marketplace for the February of 2023. Price per square foot went up 6.1%. That's the interesting piece of this puzzle right here, how the prices went down, but also the size of the home went down. So that's why we had the increase in the price of the square foot price there. Days on market, 55 compared to 41 last year. That's still a relatively fast moving market when you compare the year over year sales. Now, on to the new homes report. They too are seeing that widening gap between the available homes here and the homes that were sold in the last 30 days. So they're pretty much pending, and sold homes were pretty much at parity. Pending contracts are only down 16.6% compared to a year ago. They were at 165 in February of 2023, 195 in February of 2022. Sales are down 17% year over year, down to 161 closings. That number varies throughout the year, and there's not a whole lot of magic in it, but the closings, the builders just didn't get paid and people move into the properties. Months of inventory is up 114%. Now, this is where the big thing is coming in, because many of the builders, I've been talking about this for a couple of months, they've increased the incentives. Now that some of them are cutting the prices to get the homes off their inventory, they want to get them sold before they have to start paying too much interim interest on that completed project. And if they hold them too long, they're going to have to pay real estate taxes on that completed inventory that's out there. Average price is almost 10% up, 9.9% year over year. The average sold property was $312,728 in the month of February 2022. And the average home size went down 3.5%. That's at 1,937 square feet. Still a real nice size home. You can get 3 real big bedrooms and some living rooms, or 4 modest sized bedrooms, but still very comfortable here in El Paso. Price per square foot up 14.2%, and the days on market continues to grow. 123 compared to 159. Well, actually, it's the reverse. 123 this year compared to 159 last year. And last year, we were still dealing with some of those inventory issues of supply chain not quite catching up. They're pretty much caught up now, and they can complete the building inventory. Now, here's the big news. Now, today we're recording this. It's March the 10th, and Fed Chairman Jerome Powell predicted yesterday that mortgage rates, actually it was Wednesday, he predicted that mortgage rates are going to increase another half point. They're going to get above 7%. Well, guess what? We're already there. I'll show you in just a second. But he said that the overnight lending rate is going to go up another half a point. And that's for the banks. When they borrow the money from the Fed, they're going to have to pay a higher interest rate, and that's going to get passed on to the consumer in credit card debt and also in mortgages and car loans and things like that. But that's how they're going to try to stop the inflation, to try to get it back down to that modest 2% gain that they're looking at every year. And then here's another big story that I just saw in Fortune. Fortune is saying that the lock-in effect is going to have a big impact on our spring buying and selling market, because those people that have a mortgage rate of less than 6%, which this article claims that 99% of mortgages across the United States are at 6% or less, and if you're going to go to 7+, you might rethink selling. And that's another big story coupled with this one on the mortgage rates headed past 7. Well, I told you that they're already there. The fixed rate for a 30-year interest is at 7.028. That was just reported a couple of days ago. And here is the trend on the 30-year, which says it's at 7.184%, and a 15-year mortgage was at 6.347. So if you've got an interest rate that is less than that 15-year rate at 6.37, you're probably going to look at that and say, do I really want to buy that new house? And that's going to limit the amount of inventory that comes to the market unless they absolutely have to, because of a life change, such as a job change. We just have too much house because we're empty nesters now. Somebody passed away, somebody got divorced, kids moved out and went to college, whatever it may be. Those are going to be the reasons why people move in the spring and in the summertime, because the mortgage rates are probably going to hurt the market because they've risen. And if you've got a mortgage that's lower than 7%, you're probably not going to choose to go out and buy a new home product and overfinance or finance for a higher rate. So watch that lock-in effect as we get there. Now here's the real news. This is the FHFA appreciation rate chart for El Paso County, and this is the one that the data is all the way through December 31st of 2022, which shows that we had an 11.1% appreciation rate for the year of 2022. Now look at the last quarter down here. You can see that we actually had a negative quarter, 0.9%, but we still ended up the year on a positive note. And over the last 4 years, if you add these numbers up, 49% increase in values in a 4-year period of time. We started pre-COVID in 2019, and we had a 7.2% increase that year. 2020, 11.1. 2021 was 19.6. That's when the cheap money was out there, and it just drove the market, and a lot of people came to El Paso because we've got good internet service. We had low home prices compared to places like California, Arizona, and New York. So we had a lot of things going good for us. And then last year, 11.1% increase, even though Q4 was a decrease. That's a 49% increase in home values in the last 4 years alone. And if your taxes are going up in 2023, this is why. And we'd be happy to show you data about your home and see if we can help you reduce your real estate taxes, because those things are going up and your notices of value are going to be hitting your mailboxes very, very soon. Now, what else is going on? Comparing to the stock market. Now, this data was pulled on February the 28th, so it's a couple of days old, but this shows that we've got negative numbers in the 1 month. And this is part of what's going on with the treasury yields and things like that. The stock market is continuing to decline. They had some positive numbers, but they've reversed. And when you think about that 49% increase in residential real estate over the past 4 years, that's a big difference when we've got negatives here and positives on the other side. The Treasury yield curve is at almost 4%, 3.5 here, 3.6 is January 2023. And the unemployment rate, you can see, is that we've normalized and we're sitting at somewhere at about 4.7, 4.8. And this slide comes from, these two slides came from Dr. Fullerton over at UTEP and his business barometer report, where I just pulled a couple of those slides out there to show you what's going on with unemployment, because this is where the economy is. People have jobs, they'll spend the money, but will they be able to pay the prices on those homes as they continue to go up? This shows you what it looks like compared to a couple of years ago when we had that big spike in February of 2020, where we had 14%, and now we're back down to about 4.7, 4.8 in unemployment rate. There's the Donna Ana. They're just above 5%. That's Santa Teresa, Sunland Park, and Las Cruces that we're looking at right there. And the three key takeaways that we've got for this month's report. Number one, buying activity continues to slow down compared to last year, but it's still pretty brisk, and inventory is still moving quickly. We're still seeing multiple offers in many price ranges, just not the multiple of multiples. Okay, for example, a couple of houses we put on the market this past week. A year ago, we would have seen 20 to 25 offers. We got 5. It's a big change. It's still multiples, but it's a big change. Another one, we would have expected 15 offers on it. We got 2. Still multiples, just not the multiple of multiples of what we saw last year and the year before. Key takeaway number 2, rising interest rates will likely have a bigger impact on the inventory that's coming to the market because of the lock-in effect. I've got an interest rate that's less than 7%, probably less than 6% according to the Fortune article, and those people are probably not going to come to the market to go sell today at a high price, but then to have to pay higher on the interest rates if they have to. And then key takeaway number 3, despite these issues, El Paso residential real estate continues to be a good investment because over the past 4 years, we've had a 49% increase in values. And if you look at that compared to your stock accounts, residential real estate really makes sense. So if we can help you in any purchases or sales, if you've got something, a life change that you need to discuss, we'd be more than happy to visit with you about that and see how we can be of service to you here, either at Coldwell Banker Heritage or at Legacy Management Services, where we do single family property management. Thanks for watching. That's our report for today. God bless you and make it a great day. Bye-bye.